Hello and welcome to the latest edition of the Tax Hour. Today I'm pleased to be joined by Ray McCann to talk about one of the perhaps most controversial tax issues of recent years, the loan charge. Ray has been or was commissioned to review the loan charge and has made recommendations. His report was published as part of the budget in the autumn of 2025. So we're going to talk today about how Ray went about the review and the recommendations that he made, and also the impact it made with the government response as well. So thank you for joining me, Ray.
Morning, Nick. Good to see you again.
So before we get into things, can you take us back to 2025? You were asked to carry out the review. What was your brief? What was sort of the intended outcomes of all of this?
Well, the brief is laid out in the terms of reference, but the fundamental point was to try and find resolution for those who were still to settle. Basically, I had made it clear to the Minister that if it was a very, very broad review, that included what did HMRC do, should the loan charge be repealed, then that really wouldn't be me. You know, if it was a sort of inquisitorial review, like the COVID review and things like that wouldn't be me that would do that. I was more focused on how do we make this end.
How do we make it right?
And I was pleased that the Minister seemed to see that that was a good way forward. And I think even with hindsight now, that was the right decision at that time.
Yeah, I think, that's quite key, isn't it? Because there was still thousands of people, in significant financial difficulty because of this. So the loan charge itself, and we'll come on to a bit more about the history, but the loan charge itself hasn't been met with a lot of criticism, even in the government's response to your review. They talk about the criticism of the loan charge. So when you actually started sitting down to do the work, did you think this is just a technical tax review, or did you think actually there's a lot more to this, in that there's a lot of emotion from a lot of people involved in this?
Well, I mean, I had no doubt that there was a lot more to it than just simply reviewing the terms of the loan charge and coming up with some ideas as to how to make it softer, if you put it that way. There were grievances that had to be addressed, and if I had produced a report that didn't try to address some of those grievances, then it simply wouldn't have been accepted by those involved, and I think it wouldn't have been accepted regardless of what I had said. But equally, I had to predicate my recommendations on the back of looking at those grievances and trying to get to the root as to how justified or not that they were. I.e., were the promoters really the ones that, were the bad eggs? Were HMRC as bad as was being portrayed on social media? Was the loan charge as unfair as it was being portrayed in social media and so on? What was the responsibility of those involved? So I had to look at those issues to some extent to form a basis upon which I could then recommend a way forward.
Yeah. And in terms of your team, how many people were actually involved? Obviously, you were the one writing and in charge of the review itself. You presumably had lots and lots of help from stakeholders making submissions to you throughout the period.
Yeah, I mean, fundamentally, I had 3 civil servants on the team.
Right.
I also had a King's Counsel that I had instructed to support me in terms of this question about mis-selling of tax schemes.
Yeah.
But then I also tapped into various other professionals that I knew, accountants, barristers and so on, and got their views. So I consulted very widely.
Yeah.
And I didn't cherry pick. I didn't go to speak to people who would simply tell me what I wanted to hear. I wanted people to challenge my view, because whilst I regard myself as very, very experienced in this area and, I have quite firm views, I'm happy to accept I won't necessarily always have the right view, and that there are other people who will have, a viewpoint on it that may be different from mine. And I wanted my end result to be informed by all that. So in the end, it was quite a broad selection of individuals. And of course, that included the people who were involved. I spoke to dozens of those involved. Of all types. And again, they weren't cherry-picked. I spoke to people who didn't seem to have too much trouble. I spoke to people who were relaying accounts of a horrendous time. So I wanted to get a complete picture.
Absolutely. I mean, when you read the review, the response to the review, and articles that people have put in the tax press, that it's clear that there's a lot of stakeholders involved here. So obviously we've got individual taxpayers who were the employees involved in these schemes. We've got the employers. We've got HMRC and how did they deal with it? Because this is going back, 20 years plus, potentially on some of these, and various other stakeholders as well. So, there's a lot to kind of, as you say, you might be thinking from an individual taxpayer perspective, but actually what's HMRC's view, and whatever you come up with has to be actually, you made recommendations, but how many of those are going to be accepted if it's not actually in the best interest of all parties, kind of thing. Isn't it?
And to be fair to the government, right at the start, it was clear to me that if I went too far, the government would reject some or perhaps all of my recommendations. So effectively, I was coming up with recommendations that I felt were the best that I could do in that situation, but equally trying to make sure that when those recommendations landed on the minister's desk, they weren't simply dismissed as just being too much. But on the question of stakeholders, there is one stakeholder here that is continually missed by everybody who talks about this, and that's the general body of taxpayers. Now, I've never used a loan scheme.
Yeah.
You've probably never used a loan scheme.
I've not.
I've never used any. I mean, the only tax relief I've ever had over the years was mortgage interest relief when that existed, and gift aid relief. Nothing else. And that's not unique. There are tens of millions of taxpayers.
I mean, that's the norm, isn't it?
Never used any type of tax scheme.
You just pay PAYE all your life,
and someone has to speak for them. And when I look at the hostility that's been directed towards me on social media over the years, that's where it comes from. It comes from me putting a hand up and saying, well, what about the ordinary person? Who doesn't use any form of tax scheme, who pays their taxes, pays their national insurance, and in many cases is earning less money than the people caught by the loan charge. So we could never lose sight of that stakeholder.
Absolutely.
He and she always had to be there, and they were in my mind that at the end of the day, if I come up with recommendations that let that stakeholder down, then my review wouldn't have been a success.
No, I agree with that, because I mean, one of the first things I ever learnt at uni, and I'm sure I've mentioned this a number of times on this podcast, is Adam Smith's canons of tax. And I mean, that was one of the fundamental principles, wasn't it? Fairness across the tax system, which is exactly what you're talking about. I mean, and that was 300 plus years ago that, we were talking about a fair tax system. So I completely agree. Like the general public.
And at times, those involved, when I've had conversations with those involved, they've objected to this.
Right.
And, they'll say, oh, but they haven't given up holiday pay, and they haven't given up this, they haven't given up that, haven't given up the next thing. But that's a choice. Now, one of the things I think the loan charge, perhaps the review doesn't bring out as clearly as might have been done simply because of the lack of evidence, is those individuals who are left with no choice. It was either this way or no way. And we'll probably get on to that. But when you're in a situation where it seems to you that the only opportunity you've got to earn some money to keep yourself going and your family going is to follow a particular route, then that's really, really important.
Yeah, absolutely. Okay, so let's take it back a step and let's just talk, okay, what is the loan charge? Why did it exist in the first place? Let's just talk a little bit about the history for those who might not necessarily be sort of as well informed as others might be, in terms of the, that they might not have clients who are affected but still interested in the topic. So how did the loan charge come about? What are these schemes that we're talking about? Who are these scheme promoters and everything else? Can you give us a bit of a history of that?
I think you have to go back quite some time, certainly to the sort of mid-90s, when what we know as employee benefit trusts start to be used more widely. Now, at that point, they were really being set up by employers to provide a fund that they could help. So, for example, if an employee passed away, then there would be a fund of money there that the employer could use to help the family. They expand out into situations where they start to provide benefits to employees. The trustee of the EBT might hold a foreign property that the employees can use as a holiday home, or they might start to pay school fees. And as it starts to escalate like that, the revenue's interest in them begins to grow.
Understandably,
And then it moves into, I've seen EBTs that did all these things that paid cash bonuses, tax was paid on it, the employer got a bit of a deferral. It provided holiday homes, it provided school fees, But then all of a sudden it started to provide quite significant loans on very soft terms.
Yeah.
No interest, vague repayment terms. And as it started to expand, this seemed to become what the main benefit from employee benefit trusts became.
Yeah.
And from around about 2000, the revenue started to take real interest in them at that point, because the amount of tax that they're seeing, from the millions of pounds that are then being paid to employees ostensibly as loans,
Yeah.
but are being funded by the employer. They start to then really see, what that's costing them in terms of lost tax, lost national insurance. And at the same time, they're facing an argument that none of these transactions are giving rise even to benefits in kind. So, again, because of the passage of time, we've lost sight of the fact that benefits in kind was the sort of first battlefront, if you put it that way, whereby the revenue started to challenge these things. And then extended into, what the individuals were really receiving was just pay, or just earnings, just in a different form.
Yeah.
And as time went on, the amount of money that was involved, by the time the loan charge came in, there's probably several billion tied up in offshore trusts. Well, you say it's tied up in offshore trusts, it's actually went into the bank accounts of the beneficiaries of those trusts. So it's not actually sitting in the Isle of Man or Jersey or anywhere else. So, it was a real concern all the way through the 2000s and into the, 2010 and beyond.
Yeah. So was there a tipping point, do you think? Or was it simply that EBTs, and EBTs still exist, and they're perfectly acceptable tax planning in the right situation.
Yep.
It's just here we are talking about an EBT where you're effectively avoiding paying tax as an employee, like we've already talked about. Most of the general public who are employed just pay PAYE and national insurance. And the way this was structured was to say, well, instead of paying the employee a salary, the employer pays that money into an EBT, which most of the time, I think in this case, was an offshore trust as well. And then that EBT would loan the money to the employee. And it's nothing more than we've just added a few steps to pay them a salary, basically, isn't it?
Yeah, indeed. And you see that with the cases that HMRC taken to court. That's always been their argument, that what the employee has received is just earnings. But in my report, I did make the point that an EBT can be a fairly uncontroversial aspect, of employee share plans and so on. Typically, you almost always need such a structure to make those types of things work. But it's just the abuse of that type of arrangement that caused the government concern. And I think the real trigger was the election of the new government in 2010.
Right.
The coalition government.
Yeah.
Because obviously at that point in time, we were just coming out of the financial crisis. And I say out, I'm sure economists would probably think we were still deep in it. But we were starting, to emerge from the financial crisis. And we had a new government and they desperately needed cash. And I've got no doubt whatsoever that in the preceding 10 years, there was probably a little plan on the shelf of HMRC somewhere said, well, we should do this. And I'm on public record saying that, I would have introduced something like a loan charge much, much sooner than 2016, 2017, perhaps around about 2010. So I think this was what happened in 2010 with Part 7A was a first attempt to try and get some control over the expansion of this type of tax planning.
Yeah, so just to clarify, Part 7A, we're talking about ITPA, Part 7A, which is the disguised remuneration rules. So, when you were actually going through this review then, and I think you might say it in either your forward or certainly very early on in your report, that this has affected tens of thousands of people. As we've already said, some probably more knowingly than others walking into a problem. When you're offered what you understand to be a scheme, and back then I think tax avoidance was slightly less, not commercialised, that's not the right word. I'm thinking about things like the Jimmy Carr situation, all of these things in the media, which I think there's a lot more understanding of sort of tax avoidance, even by general public individuals now. But going back then, when you're an employee and your employer comes to you and says, "Oh, we can just pay you this, and it's better for tax purposes. Trust me, it's fine." How much should we expect an individual who has no tax knowledge to actually understand the rules of things like Part 7A and what an EBT is and all of this stuff? I mean, it's almost a bit like the sniff test, really, isn't it? Does it sound a bit too good to be true? And it probably is. But one of the things that struck me in the forward in the government response was saying, well, it's still a fundamental principle that the individual is responsible for understanding their tax affairs, basically, isn't it?
Yeah, and I tried to stay within that.
Yeah.
I mean, if someone was to criticise me for saying that I've sort of moved slightly out of it, then I probably wouldn't argue back too fiercely. But I did try to stay within the idea that the taxpayer is ultimately responsible for what they do.
Yeah.
There is some mitigation. I mean, Part 7A, I mean, do you fully understand it? Because I mean, I spoke to Part 7A experts who will admit that they don't fully understand all of it.
No.
And I don't know if you saw Andrew Hubbard's recent article where he makes the point that despite his years and years and years of looking at it, there are still parts of the employment code that he doesn't fully understand. And I made the same point in my review. So for the ordinary person, you can sort of forgive them in terms of, well, I didn't understand the rules. Well, that's fine. But you have to divide it into two different things. You have to look at it from the viewpoint is, do I think it's bad? And do I think it works?
Yeah.
And I think that's the approach that we've suffered from with this, that too often people have been prepared to advise on it. And I saw advice from accountants saying, this is not a very good idea, but on the law as it stands, it probably works.
Yeah.
So people will go ahead on that basis because that then sort of boils down to this moral question of, well, should you pay tax, even if there's a mechanism or a route whereby I can do certain things that mean I don't have to pay that tax or I don't have to pay the full amount.
And I think it's also a generally accepted principle that people are. It's okay for people to structure their affairs in a way to minimise their tax. That's what I refer to as tax mitigation, and then we've got the tax avoidance, which is technically legal for the letter of the law, but actually it's just kind of the moral bit that you've gone a step
if you
too
go way
far.
back to the 1930s in the Duke of Westminster case, and then you get the Ayrshire-Pullman case, you see that sort of strand coming through that if the taxpayer is clever enough to be able to organise his affairs in a way that minimises his tax, then there's nothing really that the law can do about it.
Yeah.
Hence, when you come forward, almost 100 years, you suddenly find that we've got a general anti-abuse rule, we've got a whole range of anti-avoidance rules, but even they sometimes will fall foul of very clever people who find arguments to work their way through them.
And in a sense, that's why we have the court system, though, isn't it? HMRC might say, this is tax avoidance. The taxpayer might say, yeah, but actually I've not broken any rules here, but that's why we have someone to kind of give us an independent view of those things.
I think that's right. I think that's right. But equally with the contractor schemes, what I tried to draw out in my review, I didn't labour it, but contractor loan schemes were very different from, for example, the employee benefit trust schemes of the late 90s and early 2000s, in the sense that those contractor schemes were fundamentally there just to pay wages in a tax advantage way.
Yeah.
They weren't there to pay bonuses. They weren't there to provide benefits. They were there simply to pay wages.
Right.
And I think that is a key difference, and that more people really need to reflect on the fact that that's what those schemes were intended to do.
Yeah. So we had these schemes largely in the 2000s, and then we had the loan charge in 16, 17.
Yeah, 2017 it became law.
And I think there's been quite a lot of criticism about that, and I think we'll come on to that a little bit more. Since then, has anything really the review? Your review is kind of the next kind of big step, I think, in what's...
Well, the big thing after that was the Morse Review in 2019.
Sorry, yes, yeah.
And which, as you know, led to a fundamental change in how the loan charge would operate. I mean, I don't think there was anyone, certainly in the profession, who was happy with the way the loan charge was originally drafted with the 20-year look back, its retrospective effect and so on. I mean, it was just hugely controversial, but... From a practical perspective, I mean, the point I was making right from the start was it just fundamentally wouldn't work. You couldn't have a situation where you rolled up, in extreme 20 years of tax liabilities and then asked a person to pay it all in one go. I mean, who could do that?
It's crazy. And I think that's one of the big things, isn't it? That so someone's been benefiting from this scheme. And yes, if it's decided that this isn't an acceptable form of tax planning, then they should pay their fair share. I think most people would accept that. But what they ended up doing is, instead of saying, okay, well, if you would have received a salary in those periods, this would be your tax, they just stuck the whole lot. And obviously, so pretty much everybody, or most of them who were earning it or used it enough, were into additional rate tax just as a lump sum.
Yeah, and it kind of simply bypassed a whole range of things. One of the most obvious that bypassed was that loan schemes had started to filter down into relatively low-paid workers. They were, employee benefit trusts were no longer the preserve of city bankers and other financial institutions and, large family-owned companies that were able to fund those types of things, and there would be millions involved. I mean, one of the last ones I was involved in before I left HMRC, there was almost £1 billion put into the Employee Benefit Trust.
Yeah.
Now, no one who is on, relatively low wages is going to associate with that whatsoever. No. So when you start to find a loan scheme being used, knowingly or unknowingly, in circumstances where the person is receiving £25,000, £30,000 a year, something has seriously gone wrong in terms of being able to, properly manage the tax system so that these things can't happen. So I think that was important. And I don't think enough attention, as I bring out in my report, I don't think enough attention was given by HMRC at the time as to precisely what the population of individuals who would be impacted by the loan charge would be. And I think this is something that Andrew brings out in his article as well, is that the people who were left sort of mainly facing the loan charge were those with no entrepreneurial interest in the business at all. And my report makes clear, in many cases, didn't have the means to pay it. So when you structure an anti-avoidance measure that then taxes in a single year, the accumulative effect of many years, it's simply heading for trouble. Yeah,
absolutely. And I mean, just to talk a little bit, I know this has affected some people more than others, obviously, but just in terms of the emotions, I mean, there's people who have literally committed suicide because of how sort of much this has affected them. So, clearly this is what we've already said, finding the balance between treating people fairly from the general public's, the stakeholder point of view, but also making sure that people are actually able to deal with this without it affecting them. And some people even gone sort of almost below the poverty line, haven't they, with this? Yeah.
Well, obviously at the point I started the review, there was some 10 people had apparently committed suicide. Now, whether it was entirely down to the loan charge,
who knows?
No one really. Well, certainly I didn't know. And then towards the end of the review, as I was passing over the final report to the minister, HMRC advised me that there was an 11th. Right. Now, when you've got a tax measure of any description that's associated with the suicides, then government and HMRC need to take that seriously.
Exactly.
But equally, you can't plan on the basis of how people will respond to particular things. And inquiries get done as to what the cause of these things are, and that's obviously for HMRC to resolve. But plainly, from my viewpoint, it was another factor that I had to take into account, that what I didn't want was more people taking their own life because the ongoing strain that the loan charge was causing on them. And I, as I made clear in the report, I was prepared to accept just at face value what people were telling me. So if people tell me 10 people have committed suicide because of the loan charge, then my starting point was 10 people have committed suicide because of the loan charge. Therefore, it's important that we come up with something that minimises the risk that further people will do that.
I mean, it's not just that as well, isn't it? It's mental health generally, and financial difficulty can cause a great deal of stress.
Well, I spoke to more than one person during the course of my review who started crying during the course of the discussion. Now, when you're faced with a grown man who's in tears, who hasn't told his parents that he has lost all financial independence because he's got this huge tax bill. And the size of the tax bill, if someone's got a tax bill of 200,000, in the world that you and I work in tax, that's perhaps not the biggest tax liability that any of your clients are ever going to have. But if you're in a situation where you're earning maybe 40, 50, 60,000 a year, and someone then suddenly at the blue turns around and says you owe 250,000 and you've got to pay up, That's pretty traumatic.
Absolutely.
Yeah.
Okay, so that's a bit of a background about the loan charge itself. So, and I think we've probably covered some of the sort of next points I wanted to make about sort of why the loan charge itself failed. But perhaps we can just go into a bit more detail in terms of what were the biggest issues with the loan charge, and what were the biggest criticisms, I guess, of the loan charge.
Well, even after the Morse review, the biggest problem with the loan charge was this stacking of liabilities.
Yeah.
Bringing all of the liabilities of the previous 10 years at that point into charge, and then taxing them all in the same year. And that gave rise to a whole range of problems, which again was associated with the fact that the population of taxpayer, many of them, or certainly a sizable proportion of them, would never have paid higher rate tax, and certainly would never have paid, the additional rate tax. But all of a sudden, the loan charge could have that effect.
Yeah.
So that wasn't good. But I think there was the shock of the change, because you've got tens of thousands of individuals who think they're safe.
Yeah.
And the first public comment I made on the loan charge was in 2017 to the Treasury Select Committee.
Yeah.
And I was confronted by a group of MPs who looked at me blankly because they'd obviously no idea what I was talking about. When I made this point that you've got this big group of individuals who overnight have found that what they thought was a sort of safe tax position was completely up in the air. Now, can you have a safe tax position if you're involved in a tax scheme? I mean, the government will obviously say no. I would say no. I mean, if a client comes to you or me and says, well, I've done this scheme, but I think it's okay.
Yeah.
You're never going to turn around and say to them, you're absolutely bomb-proof. No one's going to do that.
No.
But people did.
Yeah.
And the promoters did. And some of the other advisors that they would go to would say to them that they were safe. It was almost like the possibility of retrospective legislation and so on was completely dismissed. But not only that, it was not just the possibility of retrospective legislation that was completely dismissed, it was the possibility of legislative change, full stop.
Right.
That seemed to be, just treated as if is never going to happen. No tribunal is ever going to agree that this loan, actually, is redirected earnings. The government are never going to bring forward a piece of legislation to tax, that in full, despite the fact they had done in 2010. The promoters thought, well, we'll just call everybody self-employed.
Yeah.
And I mean, there was a recent tribunal case, Benson.
Oh yeah.
Where they argued that they were self-employed. And when the tribunal didn't accept that they were self-employed, they then argued they were employees and employers should pay.
Yeah. Yeah, I think one thing I was going to, as you were just mentioning about promoters, I think David Pett wrote an article in Tax Journal as well following your review, and talked about the. And I'm not sure whether it's what he'd heard or actually he's got what source, but that one promoter had actually gone to HMRC and HMRC had confirmed that it wasn't a notifiable arrangement under DOTAS, and effectively, therefore, I mean, if a promoter gets a response from HMRC that says this isn't notifiable as tax avoidance, the first thing they're going to do is go to every single, but that's basically in their marketing plan now, isn't it? So it might be a stretch to call it a rubber stamp from HMRC, but if you're an aggressive tax avoidance promoter, you're basically going to say this has been rubber stamped because here's the letter that says HMRC have said it's not notifiable as an avoidance scheme.
Yeah, I mean, and at the start of the review, I specifically sought out that type of scenario. In fact, I put quite a lot of effort into making sure that I got the documents for that one so that I clearly understood what had happened.
Yeah.
But it was only one occasion.
Okay,
now,
so it was a one-off.
It may have happened at other times. If it did, that's fine. But I didn't see it. So, despite me making quite a lot of noise around, because if you think back, there was a lot of social media criticism and accusation to HMRC that they approved these schemes.
Yeah.
And even on the night the review was announced, there was a member of Parliament on LBC making bold claims that HMRC approved these schemes. And HMRC denied they approved these schemes, and I never saw any evidence that HMRC had approved it. That particular example was the closest I got to it.
Right. Okay.
And it's pretty infuriating when you look at that, because it'd be different if it was just, a sort of ordinary HMRC office and someone had written in saying, is this a tax scheme? And the person in the office looked at it and said, no, I think it's all right. But when it's sent to the office that's responsible for managing tax schemes, you expect a higher standard in terms of the decision making. And I did see a fair amount of the exchange, so I was pretty satisfied myself that it wasn't a case whereby HMRC hadn't been told. They didn't get full chapter and verse, but they were told enough that it should have been clear to them that there was an issue there. Okay. But as I say, it was an isolated thing. Okay. But the more important point is if you're on the other end of that scheme and the promoter turns around and says, well, look, I've spoken to HMRC and they say it's fine, then why should you not accept that?
Yeah, I think that's the key, isn't it? Like, coming back to what we've already said about taxpayers have a duty to understand their own tax affairs. Well, if you're being told by somebody, not only an advisor, and some of these even had sort of barristers backing, didn't they? But that you're also being shown something from HMRC that says it's okay, you kind of feel like, well, have they not? Is that not enough due diligence for as a taxpayer?
It's as you work your way through this whole saga, you come across sort of fundamental realities that people are prepared to just ignore. Now, some of the more obvious ones are that the vast majority of the money that would have gone in pay-as-you-earn and NIC actually went into the bank accounts of people who got involved. That was the whole purpose of the scheme. Yeah. If you're going to get 84% of your income tax-free, then that must be true. Yeah. And then you think, well, okay, right, so we'll ignore all that then. You can do that. But then you get situations where they're believing what the promoters are saying, but they're also sucked in because they're caught in the situation that they can't change their arrangements. So Jimmy Carr was a good example. I saw statements from promoters explaining that Jimmy Carr he'd given it up simply because of the bad press. Yeah, but he didn't give it up because it didn't work. He gave it up because of the bad press. I had promoters telling me that their scheme ultimately was only ever taxable because of the loan charge. There was never any recognition that a tribunal might find against them. So that you see all these kind of step points as you go along, things that people really shouldn't believe. And then one of the really obvious ones is with these loans. If these loans were in any genuine kind of form, most of the people who are involved would be insolvent even before the taxman came along. Yeah. Because if you've borrowed, hundreds of thousands of pounds in loans and the trustee turns around and says, oh, you need to repay it now. How are you going to do that? And again, it's a point I made right at the start. Paying the tax would always be cheaper than repaying the loan. And my model obviously was the employee benefit trust settlement opportunity, where once that was resolved, those involved could then just have the loan written off without any further tax consequences. So I kind of expected that something like that would happen, that these schemes effectively would just all be wound up. Yeah.
I mean, to me, the loan charge, when it was announced, I think the biggest thing, just touching on what you mentioned about people just not expecting it to have retrospective effect, it is very unusual to have something legislated as having retrospective effect. But I think what struck me was that the people affected by the loan charge may even be people who didn't even have open inquiries into their tax returns for those periods.
Yeah, and that was among the issues that whereby, and again in my report I was able to present that these were some of the unfair aspects of it. That when you pick a group of individuals and you treat them in this particular way, whereas you don't treat people who have invested in various film schemes and brain disorder schemes and all the myriad of tax schemes that we've seen, when you don't treat them in that particular way. So if HMRC don't have an open inquiry on someone who's done a film scheme, then unless they can apply their discovery rules, then there's nothing that can be done. Yeah. And I give an example in the report, of someone who has, avoided tax in 2011 using a loan scheme or using something else. And if they're not under inquiry, only the loan scheme can be caught. Now, you have to be able to justify that. And to me, it's not justifiable unless the amount, that individual has avoided through the loan scheme is significantly greater than the other amount, which typically it probably wouldn't be. So there was all these factors which just added up to, well, we've got an unfair situation. And to some extent, my task was to try and rebalance that.
Yeah.
Maintain the taxation of these things in accordance with the policy that the government intended, but try and rebalance how it was approached so that the individuals are settling on something that was comparable with what other people had settled.
Yeah. Okay, that's seems like the most sensible way to approach something like this. So shall we dive into a little bit more about what you actually recommended then in terms of what should be done in terms of sorting all of this out and actually bringing an end to it, because I think that's pretty much what every stakeholder does want, an end to the issue. So what were the main recommendations that you made?
Well, fundamentally, I started off with the idea that what I would include in my recommendations, whatever liability I got rid of would be suspended rather than written off.
Right.
Now, I didn't object to the idea, and I think the government's decision that the extra amounts will be written off, I'm perfectly fine with that. I don't have a problem with it. But at the time, I took the view that suspension might be a softer way of approaching it, because if you suspend the liability, but the individual taxpayer gives something in return for that suspension, so it could simply be to make sure the tax affairs are kept up to date, a bit the way the penalties work.
Yeah.
I'll keep my tax affairs up to date. I won't get involved in any more disguised remuneration schemes. I won't do this. I won't do that. I won't do the next thing. That's additional consideration. So when you're looking at a sort of negotiated settlement, HMRC are agreeing to end their inquiry. They're agreeing to treat some of the liabilities suspended. And on the other side of it, the taxpayer is agreeing to pay what the non-suspended amount is, but also adhere to the conditions of that suspension. So I took that view that would give me a resolution whereby the legislation would stay intact, the tax position would stay intact, but the ultimate settlement between debtor and creditor would reflect the fact that there was consideration being given on both sides. Okay. The government have preferred the write-off. That's fine with me. As part of that, I decided that late payment interest should be suspended. But what I've tried to do across the whole thing was find a fairly straightforward way of doing it. So rather than late interest payments should be suspended or written off where HMRC are at fault, well, that would never work. I don't know what your experience is, but my experience is HMRC never accepts that it's at fault. So I thought, well, let's just suspend it, get rid of it. There was a lot of social media criticism on HMRC on penalties. I saw almost no evidence whatsoever. And in fact, I had a fairly interesting conversation with one of the really senior people in HMRC when I picked up this point about penalties. And he just shrugged his shoulders and he said, you know as well as I do that we don't charge penalties. and I thought, well, yeah, it's probably true. So, but again, I thought, rather than say, well, HMRC should only do this, do that, let's get rid of penalties unless it's really clear that the taxpayer has behaved really badly. And in the vast majority of cases, that's just not going to be the case. So my expectation is HMRC will just, across the board, just say no penalties. Inheritance tax, let's get rid of that as well, because when it's chargeable, when it's not chargeable is complicated. It doesn't make sense to a lot of living people that somehow or other they're paying inheritance tax when they haven't died. And it kind of goes to the advice, it goes to the only advice on inheritance tax I ever give, which is don't die. And so, I got rid of that. But I was comforted actually, after my review was in, there was an article by a law firm and they were flagging up how much it costs to collect inheritance tax. And it actually matched a point that I'd made in the review that the cost of collection in this context might actually exceed the amount of inheritance tax that HMRC could get. But ultimately, you would still be confronted with the reality that you could count up all these liabilities, and some people just simply couldn't pay. So the other side of the review outcome, and this is a bit that I don't think is being given enough attention to, and I kind of understand why people aren't, is a new approach by HMRC to the question of, for those who are still struggling to settle, how do we approach them? Because how they approached them up to the point I got involved, even HMRC accepted. It just wasn't good enough. So what I'm hoping is that for those individuals who, regardless of the adjustments that get made to the liability, that HMRC will have more humane, however you want to describe it, approach to trying to work with the taxpayer so that they can agree something with HMRC, that they can get resolution and put this behind them, so that it's not hanging over them for years and years and years. I did recommend that the maximum time to pay should be 10 years and that there should be a write-off at the end of the 10 years. The government didn't go for that.
Yeah.
But I mean, I think what the government are hoping is that with the changes that I've made and the changes that they've made, that 10 years might be the maximum that anybody would need in any event. But we'll see.
Yeah, because the changes that they've made then, so there's this first 5,000 write-off.
Yep.
There's an automatic payment plan accepted up to 5 years.
Yep.
As you said, you recommended it could by agreement be 10 years and then write off, but they've suggested that I'm just trying to remember why they decided that wasn't the best approach. I think they were saying administratively the amount of extra effort that would have to go into understanding whether someone could afford to pay within 10 years just would make it a very costly way to...
I suppose you have to take the extreme example. Someone agrees a 10-year payment plan, then the following year they win the lottery.
Yeah.
What do you do in that situation? Yeah. Or the following year they get a much better job, so they're financially much better off and so on. So, I mean, I could see the point that was being made that administratively it might be more awkward. And then the person would have a suspension hanging over them that they'd have to, for want of a better term, they'd have to behave themselves during that period. So I understood that. But again, to repeat, when I went into the idea of suspension, it was to try and soften the blow.
Yeah.
Because I did expect at the very, very start that no matter what I recommended, it would cost the government money. Mm-hmm. The HMRC's estimated 1.7 billion yield would be significantly reduced by my recommendations, assuming they were accepted by the government. So at the same time as I was putting forward recommendations, I was trying to find a way of making sure that those recommendations, weren't as hard-edged as they could be. I mean, I think if I'd simply said HMRC should write off late payment interest, whereas HMRC should suspend late payment interest, and if the taxpayer agrees to certain conditions, that at the end of a period it's written off, it just feels, I don't know, it just felt different to me.
Well, yeah, I think it does, doesn't it? Because you're not kind of taking that hardline approach, and it's almost you're more likely to get the government to agree to the recommendations you're making, and therefore, that's kind of what you said at the start. If you put something in place or you recommend things that are reasonable and that would be seen as being a fair outcome for as far as possible for all stakeholders.
Well, I spoke to one guy who actually had agreed to settlement with HMRC, and as soon as he agreed to settlement, he went out and did something else. And there's something else I think is even worse than the loan scheme.
And you think, well, in that point,
I didn't want to flag up to him that you might have a bigger problem, but under my approach, he wouldn't be able to do that. He would have had to, fess up and say, look, I've got this other thing and we need to resolve it. So, at the end of the day, the government decided that they had a preferred approach, and I was fine with it. Yeah.
And I think, from what I've sort of, because I've not personally, in terms of the role I have in largely corporate world, I've not personally dealt with individuals with loan charge issues. But from what I've read around the loan charge, it feels like there's a huge amount of criticism when it came in. The recommendations that have been proposed, and it was 8 out of the 9 were accepted, I think.
Yeah, something like that.
Feel like it's something that is going to sort of reduce the strain on those taxpayers who felt like it was an almost impossibility, as we've explained, but also bring an end to it in a fair and reasonable manner. And that's my impression of it. But as I say, I'm
go
not
back.
close to
we're
it.
Not quite. We've just passed the year point, haven't we? Go back to 23rd of January, 2025.
Yeah.
Now, what I don't know at that point is what HMRC's estimates are in terms of numbers. But I then subsequently, fairly quickly after that, find out that they're estimating it's 45,000.
Yeah.
And they're estimating that it's 32,000 that's still to settle.
Right.
So I'm at a situation where if I take the 32,000, I've got 32,000 very unhappy taxpayers. That I'm trying to find a way through. But more important than that, I've got 32,000 very unhappy taxpayers, most of whom will have a different fact position from anybody else.
Yeah.
It'll be a whole diverse range. Now, come forward to 23rd of January 2026. Of that 32,000, I've got 10, on the government's estimates, I've got 10,000 taxpayers whose liability is gone.
Right.
I've got another 16,000 on top of that who will benefit from a material reduction
Yeah.
in their liability. The government have estimated an average of 50% reduction.
I was going to say, there is in the government response, I think there's examples, aren't there, depending on amounts and things.
Yeah, showing. And then when you take the difference, I mean, what does the difference work out? Another 6,000 individuals.
Yeah.
Now, they're outside the cap, but they will still benefit from some reduction. So they still get they'll still get at least 70,000. And in that 6,000, that will graduate. Now, a firm got in touch with me about a client, and they gave me an example, £100,000 liability. And because of the way HMRC are designing the settlement, instead of it being 10,000, it will be a 30,000 liability. Because the cap will then limit it to 70,000.
Yeah.
And I thought, well, okay, it's 30,000, but if you've got £100,000 liability, you've probably got £200,000 of income, or thereabouts. Might even be higher.
Yeah, you've got to put it in perspective.
Yeah, it might be higher. So when you actually look at that as an effective rate, 30,000 of 200,000 is a 15% effective rate.
Yeah.
So you have to look at it. You have to look at it that way.
Yeah.
And again, you've got to keep in mind this silent stakeholder.
Yeah.
You know, who's getting up every morning and going to work and coming back at night time, and paying all the tax and the national insurance. You have to try and always keep that person in mind.
Yeah.
And what would they say, you know, to a situation where their next door neighbour, because he used a loan scheme, has got a 15% rate?
Yeah.
You know, and in some situations it will be even less.
Yeah.
In fact, some in 10,000, again, to take the government's figure, it's a zero effective rate.
Yeah.
So you know, the critics. You know, it's fine. It's fine to criticise. Everybody can criticise. I mean, I've criticised HMRC endlessly for the last 8 years. It's easy, but you have to be able to answer the question, what would you do?
Yeah.
And if repeal's not an option, then what's the alternative? And, you know, some people have said to me, oh, you should have made it prospective from 2017, but that's effectively repeal.
Yeah.
You know, and I don't think the government would have gone for that.
Yeah.
The previous government certainly weren't going for it, and the current government are not going to go for it. And I think, you know, both James Murray and Dan Tomlinson deserve credit for taking the decisions that they've taken.
Yeah.
Because, you know, at the point I submitted the review, I did have some anxiety that I had gone a bit too far.
Right.
Over, you know, and too far away from trying to maintain a balance between, you know, the general body of taxpayers and those involved. Yeah. But, you know, I was determined to try and make sure that whatever I recommended, it was reasonable to conclude that a large proportion of those involved would be able to settle.
I mean, one other thing I was reading was that if, for some of these individuals, they might have retired by now, and you know, and just sort of talking about your point in terms of 10,000 might have a 0% tax rate. Well, you know, these are people at the lower end of the scale who might have nothing more than a state pension by this point in their life. So to actually then still say, well, you still owe tens of thousands of pounds worth of tax it's almost just not logical that that's ever going to be possible for them to pay it. So,
well, think of someone who's in a loan scheme long term. What the implications are for that. You know, they're paying hardly any tax, assuming that they're declaring it at all. They're paying some tax, perhaps on a benefit basis. But, you know, quite often, you know, they weren't declaring it at all. I mean, I spoke to one chap who had £1 million, hadn't declared any of it. So paid no tax.
Yeah.
Paid no tax. He's paid no national insurance contributions. It's likely he's got a big hole in his national insurance contribution record. So that's going to have implications for his state pension.
Yeah.
You know, so these things, you know, they sound at that point in time to an individual like that as kind of good news, but you know, in the long term, they're bad news. So you know, coming back to the point we made at the start, I think it was right that the government did take action against them, and you know, as I said at the time, I supported the action against it, and I still support the action against it. My criticism has always been the way it was implemented, and the terms upon which HMRC expected people to settle. And again, I can forgive HMRC at the time because the data's imperfect. But it's once they start to realise what the implications of the loan charge is and what the effect it's having, then that's when, you know, I think they do get criticised, and I think they deserve to be criticised, you know, for not responding effectively to that. Because you can see when it's introduced originally, HMRC said to me that what they hoped was it would act as a sort of spur, you know, backstop that people would look and say, well, the game's up, we better settle with HMRC.
Yeah.
And you can see the 3-year lead-in, well, more or less 3 years lead-in time from 2016 to 2019, provided an opportunity and a window whereby things could get resolved. But I think the shock of what was involved was so significant that it just meant that whatever that plan was, it just was never going to work.
No.
Because, the amount of money that people owed for the years in which they'd used the loan scheme, it was commensurate with what the loan charge would charge, the bit whereby it changed your rate from basic to higher rate and so on. I think that was around the edges.
Yeah.
I think the bulk of people would have been 40% taxpayers probably during the time they were on the loan scheme.
Okay. I think the other thing I wanted to kind of touch on, so we have a solution, or the government's made their response, this is what they're going to do, and we've talked about the numbers of people who are going to be affected and at what amounts. So it seems largely, and I don't know if you've had much feedback in terms of the response from taxpayers involved as to whether they think it's a good outcome, whether things have turned around for them. So I guess my first question is: have you had any response from individual taxpayers who you've spoken to? And then I just wanted to touch on the promoters and what's sort of, because they've made a lot of money out of these schemes, and what's kind of been their recourse as well.
Well, I haven't had any reaction from a promoter, and I think that is inevitably going to be the case. There was a little bit of frustration from my viewpoint because whilst I was conducting a sort of investigative review, I had no investigative powers. I couldn't compel the promoter to talk to me. Most of the ones I contacted were quite happy to talk to me, but they were happy to talk to me on their terms. And given where I'm coming from, their terms not necessarily what I would want to hear.
Yeah, exactly.
So it would have been helpful perhaps to have been able to give them a bit of a harder time. But it was what it was. Yeah. But it didn't matter what questions I asked them. I wasn't going to get an answer that involved any sort of acceptance that they had done anything wrong. Yeah. In fact, I'm trying to think if any of them responded to me on terms that didn't sort of try to paint HMRC as the bad guy and all this. Yeah. And I could have gone. At one point, my draft report, was heading towards 100 pages until I reined it in, because it was just far too much. Yeah. So sort of around about May, June time, the draft report was about 100 pages, and I thought, no, this is no good because we're not finished yet. So I took a lot of it. Out. I kept in the essential parts of it, which is why in some places things aren't explained in as much depth as, like, for example, the Employee Benefit Trust Settlement Opportunity. It gets about 3/4 of a page, but it could have had, easily could have had a whole section to itself, in terms of how that worked and what it meant and so on. Likewise, I could have put in numerous examples of what the promoters were saying, but you don't need numerous examples because they were by and large all saying the same thing. Our scheme's lower risk than their scheme, and we can give you 81%. Oh well, I'll come to you then. And somebody else pops up and says, "Oh, we can make it 82%," and then I think the high water mark was 84%.
Right. Okay. I think there's just one thing I kind of thought, just to round things off, just one final question would be, so you made your recommendations, 8 out of 9 of those were accepted, so I think I know what your answer to this question is going to be, but do you think the government response is as good an outcome as we could have expected? Do you think anything could have been done differently? And I guess, are you happy with the government response?
Well, the government want to bring these schemes to an end.
Yeah.
Previous government want to bring these schemes to an end. The current government wants to see these schemes ended. I think everybody in the profession, apart from the people who benefit financially from these schemes, want to see these schemes brought to a close. The government have had a review done by the Treasury, 2018. They've had the detailed Morse review done. Yep. They've had my review. HMRC built various concessions into the settlement opportunities that they provided. People were still unhappy. It was put to me during the review that didn't matter what I recommended, there would be unhappy people, and I think that's
that's the nature
obvious.
of it, isn't it?
Yeah, I think it's obvious, and I accepted that myself. I was never, in the situation where I was going to put perfect in the way of coming up with something that was good. Yeah. If I'm honest, the government response is better than than I kind of thought it would be. I kind of hoped that they would accept all my recommendations.
Yeah.
People got themselves confused a little bit. Some people do deserve a bit of criticism for this, that people got themselves confused a bit about who would have the final say. And I started to be lambasted on social media as admitting that somehow or other I didn't have the final say. But the terms of reference were quite clear. What was in my report, I would have the final say as to what went in my report. And I had the final say of what went in my report. No one put anything in my report that I didn't agree with. No one put in my report something, that I hadn't personally given some thought to. But that's not the same thing as what happens. The government, it was entirely open to the government to reject all my recommendations, to accept half of them, to accept some of them, to accept all of them.
Yeah.
That's how the system works.
Yeah.
And anyone who criticises that is just not thinking about it properly. You can't have a situation where someone's put in a position that I was put in, that somehow or other you can usurp the democratic process and force a government to follow a particular line. Whilst I understood people, sort of, as I say, lambasting me over the fact that, I'm admitting that I'm not going to have the final say, people actually need to read what the documents say. And I see it as well with, the various articles I've written over the years about the EBTSO and the settlement with the banks go back. People need to read what I've actually said rather than what they think I've said.
This is the problem, isn't it? Especially when it's social media and all you get is people almost having heard things second, third hand, not actually even understanding the context of which things were said, let alone what was said. It's easy for those things to go out of hand. And
because you and I are tax professionals. We understand the difference between headline rates and effective rates. We also understand how you work, how you get to a point where what your effective rate actually is and so on. We also understand that, if you take a simple example, when you lose your personal allowances, if you go above 100,000, you start to lose your personal allowances. It doesn't mean you're paying 60% on your tax. People advertise it that you're paying 60%, but your effective rate overall is in the 40s. When people say, oh, well, but the bank's got this deal and the big company's got this deal, hence the example I gave you earlier. When people actually work out what the effective rate is of what my recommendations come to, even with the government, the cap that the government had put on it, they'll see that their effective rate is much, much lower and commensurate, because I took the EBTSO as a model. And my criticism of those things has never been that they existed. It's that when it came to contractors, there weren't the same layer of concessions built into the offers that were being made to them to reflect the behavioural thing. So the point that I've stressed time and time again is that someone who complied with tax return requirements, who declared their loans, who paid their benefits in kind, was treated exactly the same as someone who just ignored the whole system altogether. Now that's just fundamentally not right. It's not the way to do it. And it's not good for taxpayers to think, well, why should I comply? And it's the same argument that comes down to, giving, some sort of concession in the first place. Well, why should I comply early, or why should I comply at all if I can just hold out and then, they'll get a deal? Now, I think the loan scheme situation is different because people have had years and years and years and years of hassle and stress and strain. And a large proportion of those individuals are just not the type of people who would be equipped to handle that. I mean, you'll have clients who don't bat an eyelid if HMRC come calling. I've had clients who don't care. I mean, I've had clients where I've told them, well, I wouldn't do that, and they do it anyway. You think, well, sorry, you've only got yourself to blame, and they just shrug their shoulders. Or, well, it's just the perils of business.
I mean, it's a big range, isn't it? There's some people who literally don't care. There's some just think they'll get away with anything, and then there's some people who you almost think you're worrying over nothing. Because I know that because I've dealt with HMRC and I know the tax law, but they don't know that, and maybe they've seen these things in the press, like about the loan charge, and everything worries them. So
and think of your mortgage. You're buying a house and you're sorting out your mortgage, and you think you're talking to a trusted financial professional, and he or she explains that this is how you set your mortgage up and all that sort of stuff. I mean, years ago, you used to have offset mortgages. Now, offset mortgages, when you could easily present an offset mortgage as a bit suspicious. You put a bit of money in the bank and you won't pay any mortgage interest.
Yeah.
And the other alternative is, well, you put a bit of money in the bank, you won't pay any, but that's equivalent to you getting tax relief on your mortgage interest. And, so you can present it that way. Now, imagine the government had decided that it didn't like offset mortgages at some point and had retrospectively decided, no, we don't like that. We're going to recoup all that money. Just think how horrified you would be. You're suddenly confronted with this change in your landscape.
Yeah.
And I do recall at one time when I was in HMRC, there were serious discussions about whether offset type arrangements should be restricted where trades were involved, because some businesses started to have offset arrangements to help minimise their banking costs. And the argument was put, well, if you don't object to it in a sort of you don't object it in a residential context, why should you object it in a business context? And then it was to say, it's too much trouble anyway. But something like that can be presented quite easily as being a bit kind of, a bit suspicious. So
I agree. It's how you frame some of these things, and the sensationalized headlines, I think, is dangerous.
But it's the shock if something like that was to be suddenly changed overnight.
Yeah.
Or even your bank decided that, don't like these arrangements and you've underpaid your mortgage for the last 10 years. Oh, my God.
Yeah, exactly. We'd all be in shock then, wouldn't we? Well, that's been a really useful and interesting discussion. I hope that has been for our listeners too. So all I can do is thank you for joining me again, and hopefully we'll see everyone on the next one.